What's going on, everybody? You're watching After the Call on Yahoo Finance, and it starts now. Brad Smith here alongside Michelle. Earnings call for Amazon just wrapped, and this is why we started this show. Look at this in Amazon shares after this call. From the time the call started to now, Michelle, the stock has erased all gains seen since the report dropped, and now are down after the executive team. They sang an extremely cautious tune in unison here, and essentially poured some cold water on some of the prospects for AWS, really looking towards a further deceleration there, Rochelle.
I mean, it's true because when the numbers first hit with a top and bottom line beat, everyone's excited. And then you got this more cautious tone coming out of the C-suite. And it made you sort of wonder, is there a disconnect? Are they perhaps hum-bragging? Is this a downplay? Or are they genuinely more concerned than we give them credit for? So the gains that we saw, now starting to dwindle here as people are really honing in on some of these cautious tones that we heard. We heard a lot of references to economic uncertainty. So, wondering how that's going to affect the consumer and, of course, how that all plays into the juggernaut that is AWS and the cloud.
Yeah, spot on. Okay, so let's fire the key takeaways here because we hit on that first one there. One of our key takeaways was just around what that cautious tone was. The C-suite was extremely cautious amid the economic uncertainty and really speaking through not just the actions that they have taken, but also how that is governing conversations with their core customers at the end of the day. And think of this as two customers, of course. Remember, you've got the B2C side, the end consumer, right, where they're focused more on or are tracking the price scrutiny in the discretionary categories in e-commerce, or the B2B side, where they're looking across their customers that are saying, hey, we need to optimize everywhere that we're spending money right now. And if that's in the cloud, then we need a better partner with that. And that's why Amazon is leaning into this longer time frame to say, look, we're partnering with them for years from now. So this might be a lull period, but we're hoping that that brings us a relationship with a larger customer lifetime value over time, Michelle.
I mean, it's true. And as we look at the second point here, this focus on cost cutting, we knew it was coming. We heard Meta leading the way with this year of efficiency, trying to cut costs here. We saw the layoffs, obviously much deeper layoffs announced than we expected with Amazon. We knew they were going to be streamlining. And so they have this balancing act because obviously they want to cut costs, but they also want to invest in some of these areas as well that are going to propel their next level of growth. It's a very different period from where we were at the peak of the pandemic. Obviously, you had a lot of overhiring there. So really a lot more cautious tone here when it comes to how effective they're being with their cost cutting as well and where they're choosing to cut.
No, it's a great point. You think about those 9,000 roles that they cut across AWS, they cut this across Twitch, and of course, 9,000 of the overall base that Amazon has. Yeah, it's not a huge percentage compared to some of the other tech companies that have had to cut. But at the end of the day, that's still significant. That's still looking across the business units and saying, we're not necessarily prioritizing the investments here anymore because we need to shift those dollars elsewhere. And the reallocation of capital has really impacted certain divisions more than others there. So they talked about the 9,000 roles. They talked about the operating margin as well. And people should zero in on this. During this quarter, they saw a 1.2% operating margin. And they're trying to get that back to some pre-pandemic levels of 4% there. So you heard that from the executive team on the call. And lastly here, we got to fire the last takeaway. And that was the AI train. That rolled through Amazon as well here on the day. They talked about that. And I'm going to break this out just a little bit more in a moment here. But they're talking about how AI is going to reinvent the cloud, Michelle.
I mean, when you hear Amazon saying this, I mean, obviously AI is something that Amazon has already been using to optimize things like ads, to optimize the customer experience. And they did mention that obviously we have now new levels of generative AI helping perhaps with coders and some of these third-party sellers, really getting them to step their game up here. So it's an interesting development here. They didn't seem to brag about it wildly, but you definitely got the sense that it really is sort of interspersed throughout the ecosystem already. And they really are just at the beginning at this next level of growth here with AI.
And to speak to that, let's roll a clip from the call here talking about AI.
Few folks appreciate how much new cloud business will happen over the next several years from the pending deluge of machine learning that's coming.
All right, short and sweet. So here we're going to roll in the infamous whiteboard here. Let's get it in frame. There we go. And we're going to talk about 3 AI layers here that Amazon laid out on the call. This is extremely important for the folks who are looking to invest in generative AI and are just looking for some type of playbook. What's going to be needed to build out this stack? And so I've drawn out the stack for you here. And basically, Amazon laid this out. You heard it from Andy, you heard it from Brian, the CFO, as well at the bottom. And here we're going to kind of put it into 3 very simple, easy to remember letters. AMC. A lot of investors out there should remember that. Anyway, at the bottom of this, you got compute. What are you thinking about there? You're thinking about the chips. The key there is the chips. They outlined that on the call. The models, that is going to be the M of this AMC. This is the LLMs, the language learning models that are coming into play. And this is where Amazon is talking about where language learning models about 6 to 9 months ago weren't that compelling. But they are still early days, but investing, and they have been investing for several years, they say. And then lastly, sitting on top of that, you've got the apps. Think about ChatGPT. Those are the apps that sit across or on top of this stack. And that's where they're trying to really expand out where the different types of apps sitting on top of the models that Amazon can decide to license out, or other people can build on top of Amazon's, yes, compute or cloud or chip structure that they're designing for themselves too. That's where they're trying to move this messaging forward. And so that was, I think, a key within this call for investors. I know there was a key part of this call that you also wanted to call as well, Michelle.
That's right. But as you mentioned, obviously building on some of this existing infrastructure, they're really bringing everybody in, showing a little bit of the secret sauce there. Obviously, a lot of focus on AWS, a huge portion of Amazon's business. And when Jassy was talking about how the spending is changing for some of the consumers, this is what I honed in on. Take a listen.
In AWS, what we're seeing is enterprises continuing to be cautious in their spending in this uncertain time. Customers are looking for ways to save money however they can right now. They tell us that most of it is cost optimizing versus cost cutting.
So really honing in on the fact that it's not that they're just sort of cutting these costs, but really being a lot more strategic. So I think Amazon wants to position itself to really take advantage of that by building on AI, but really keeping some of their clients in that ecosystem and offering them more bang for their buck here, because there's a lot of options out there. But when you have a juggernaut the size of Amazon and an ecosystem that covers everything, as you mentioned, from the customer side to the enterprise side of the cloud, you've got to keep people in the ecosystem. So that's why I think they're trying to set the expectations a little bit low, but I think they're very well positioned here.
Yeah, some would call that sandbagging, but yeah, I would lean in the direction that you have in a very much more eloquent way put it. Of course, the golfer in me came out on that, and I hate when a golfer with a higher handicap than the one he actually has walks up to the course. Anyway, that's neither here nor there. That's for another day or weekend. Rochelle, all in all, I need to know, what vibe would you give this call?
You know what? I was going in with a 4 because when you look at the numbers themselves and you look at where they're positioned, even with the macro uncertainty, I think Amazon is very well positioned, especially when you consider where they were just a few quarters ago. That cautious tone from CEOs, obviously weighing on that a little bit, but I'm sticking with that. I'm going with a 4. What about you, Brad?
I'm giving this a 3 out of 5. I'm looking at the stock reaction. Honestly, I'm kind of using that as my guiding light here. And I think for a lot of investors that wanted to hear an Amazon be upbeat, take a victory lap, this is a reminder that under Jassy and the new leadership, they're not necessarily going to be the same type of gleeful or we are this powerhouse. They recognize and they understand the company that they are leading, but they're understanding as well the intricacies of how they need to communicate with the street in under promising and over delivering. And I think the call out on AWS, that caught a lot of attention on the street as well here. So all in all, the focus on the economic uncertainty here really loomed large. And I think that sent a bit of a shockwave, poured some cold water, even on today's market activity that we saw by the end of the day. So all in all, it'll be interesting to see how things open up tomorrow after this call, given what Amazon just dropped on the markets here today. Do want to bring in our own Ali Garfinkel, who tracks Amazon extremely closely. She's been able to speak with some of the executives over years. Ali, what'd you take away?
It really was that shift from green to red. At first glance, we had this euphoria, and at second glance, there was trepidation. And it was interesting hearing that transition as it was happening. Because initially, as I was pounding the pavement, texting every analyst I knew, what they were saying was really optimistic. This looks great. This is a blowout. That Q2 guidance win is important. This will add fuel to the fire of the tech rally. And at that moment, right at the very beginning, Wall Street and the Twitter sphere were pretty aligned. As I was combing through social media, I saw stuff like, man, Amazon's back, or I've owned Amazon a long time and I'm really excited. So where did this all go wrong? I used this metaphor earlier today. Amazon is kind of like an iceberg. It's impossible to see it all at once. So it's the sort of thing where watching the street kind of adjust to this, taking a beat, investors realized they were worried about a few things. And the key one there was cloud. One analyst I was talking to actually pointed out, hey, these AWS numbers, they were a beat, but they still do reflect a slowdown. Keep in mind, there's rising competition here from big names like Microsoft and Google. We saw Google Cloud turn profitable earlier this week. And Amazon Web Services has bolstered so much of Amazon's business for so long that trend is still concerning. Additionally, I do think there's kind of a narrative problem here. It's not as their cost-cutting story just isn't as clean as, say, the one we're seeing out of Meta. Amazon, it's not that it's an unconvincing cost-cutting story. It's just that there are so many different businesses and so many different parts and so many different degrees to which businesses are being shuffled around. And I think for investors, there's a little bit of a sense that they're kind of stuck reading the tea leaves on cost-cutting. I was in the media call that CFO Brian Olsavsky holds before every earnings call, and I actually asked him about this. And what he sort of said was that there are kind of two camps that they're thinking about cost cutting in: overall productivity and operations and business by business financial assessment. I don't know about you, but to me, that sounds like this is going to be a long haul. And yes, there is just cold water absolutely everywhere right now. But let's also remember that these numbers that came in were fundamentally a win, and frankly, better than I was personally expecting.
Yeah, indeed. On the onset and the headline of the numbers itself, better than anticipated by the street in pretty much every category except for some of the growth metrics that they've forward here in the forecast for AWS, or at least disclosed on the call. Yahoo Finance's own Ali Garfinkel, thanks so much for getting those takes and that direct line of communication in to Amazon C-suite ahead of us going live after the call here. We got to put a bow on this. Rochelle, your final takeaways.
I mean, like I was saying there, throw some cold water on what should have been really something at least to celebrate, even with the macroeconomic headwinds. I mean, Jassie's saying they expect to have their fastest prime delivery speeds ever in 2023, even with customers sort of trading down and making these sort of strategic decisions about spending here. I thought this actually was, as I said, a bit of a cold water thrown here on what should have been essentially a very good quarterly report, Brad.
Yeah, it's kind of like, all right, yeah, what have you done for me lately? But also, what are you going to do in the future that analysts have to keep in mind here? And there are two things that I would put on analysts' desk. Number one, and of course, all the investors that are viewing here right now, investors hearing this type of tone or sentiment from Amazon, remember the narrative that they're trying to tell. They're trying to say that, hey, we're still a growth company at the end of the day. And the areas that we're looking to grow, especially in AWS, even amid this deceleration, we're trying to set ourselves up for better customer relationships that pay off over time and provide more margins to get us back to our pre-pandemic norms. And then the other thing that I would offer up, I wish everybody cared as much about AWS as much as they do, or cared as much about AWS as they should or could about how much I'm spending at Whole Foods. It's too expensive. It's so pricey. Whole paycheck, man. My goodness. All right, that ends my tirade here on the day. Yeah, they spend a little bit of the time talking about it, but yeah, they still try to position even Whole Foods and the grocery category as a growth story as well, which, quite frankly, going up against Walmart, it is. That does it for us here on After the Call. You've been tuning in after the Amazon call just ended and shares are count down by about 2.4%. Yeah, don't adjust your audio. They are down after being up by 11% after they reported earnings. We've got much more coverage tomorrow morning, starting at 9 a.m. Eastern time for Brad Smith, Michelle Akufo, and Ali Garfinkel, and the entire ATC crew. We'll see you later. Bye.